Now, before the Iran war in late February, global oil markets feared a supply glut, with Brent trading under $70 a barrel as American production outpaced demand. Now, this expected surplus was driven by increased production and OPEC quota adjustments. However, immediate threats to the Strait of Hormuz have caused prices to spike over 70% to above $125 a barrel now. Global oil markets have surged sharply, with Brent crude rising to its highest level in over 3 years. Escalating tensions between the United States and Iran has prices jumped nearly 10% in a single session as disruptions in the Strait of Hormuz sparked fears of prolonged supply constraints. The rally in oil comes as U.S. President Donald Trump signaled a hardline stance on Iran's nuclear program, and as a result, the stalled negotiations further fueled market volatility. At the turn of the year, predictions were for Brent crude to trade in the $50 to $70 per barrel range in 2026. In recent years, global oil markets were experiencing a surge in production, largely driven by the Americas, which threatened to overwhelm demand. However, the base case forecasts now show Brent at well above $100 for the remainder of the year. Fears of an extended blockade at the Strait of Hormuz, a key artery for 20% of global oil, turned the market from oversupply to panic-driven. This transformation from a potential supply glut to a scarcity-driven surge highlights how quickly geopolitical tensions can overcome fundamental market conditions. Even as immediate end to the war in Iran not expected to stop the economic consequences from the historic energy crisis. Now, the most optimistic outlook for Brent this year is pegged at around $80 per barrel, and that is still around a third higher than what was expected at the start of 2026. While currently Brent crude is pricing in a war premium, analysts say Brent could possibly revisit the 2022 highs of over $140 per barrel as soon as this week, and that is if the Hormuz blockade continues. The benchmark has already gained over 20% this week so far. The latest surge comes even after the United Arab Emirates' decision to leave OPEC, the oil producers group. Ideally, that should have weighed on oil prices on increased supply, as the UAE now does not have to follow a production quota system. However, the uncertainty on when the Iran war will completely end has weighed on prices and offset UAE's OPEC exit.